Welcome back to Investing with Confidence, sponsored by Online Trading Academy. An Online Trading Academy on their 25th year, teaching people just like you how to trade and invest within these financial markets. We've talked a little bit about some of the other assets today: stocks, options, futures, forex. Whether you're looking for short-term income potential, or maybe you're looking at protecting or learning the strategies to grow your retirements, your 401ks and IRAs. And we have investing classes right here in Bloomington where we go into detail, Online Trade Academy's core strategy, which is designed to teach you to make better investing decisions. So call 952-814-4410 for 2 tickets, or just text the word invest to the number 484848. You're going to receive a financial quick start kit, which will help you get started right away when you get set up for this investing class. So, Al, we talked about some different stocks here: Moderna, Gap, Twitter, Viacom. They are all down pretty big, respectively. Okay. Now, I want to talk about, there's a commodity that, not lean hogs, but a commodity that
your favorite.
I've really been liking.
One day, folks, we're going to do a show on why Josh likes lean hogs.
Well, we got to figure out why that is first, but the oil market, roughly at about $82 per barrel, 82, 83, has really we've been talking about this for a long time, how it's been impacting the pumps.
Sure.
And gas prices are going up, oil prices are going up, and it's really showing some great movements going up. And I talked about last week, I'm looking at an area right around 90 to 95 where it could potentially turn. Could it continue to go through that? Because we're seeing a lot of people talking about $100 oil.
Correct.
Well, with all this inflation that we're seeing people want to protect themselves from inflation. Well, one way it would be to have a strategy in the financial market. So if somebody drives a lot and they pay a lot of money for gas, spend a lot of money in gas, well, there's a way to hedge that in the financial markets. Now, with oil, as it goes up, there's benefits there, as we talked about in the whole show. As oil goes down, there's benefits. But let's just say somebody thinks like the oil ETF could go sideways for a while. What if someone thinks, is there ways to collect profits or have the opportunity in sideways markets?
Absolutely. There's a couple of different ways of doing that. One is to invest in something that pays dividends, so you have that cash payout coming in every once in a while. Or you can use an option strategy. There are option strategies that will benefit in sideways markets, and these are really great sleep-at-night kind of strategies to use. So the market goes 3 directions. It goes up, it goes down, it goes sideways. Most people, and I'm guessing that the majority of you listening to the radio show right now, can only benefit if the market goes up. That's 1 out of 3 opportunities to be successful. I think everybody would agree that if you have 3 out of 3 opportunities, your potential to be successful is much greater. So we teach those strategies. We teach strategies to benefit in all different directions. If you want to be in oil, if you want to be in any of the commodities, if you want to be in stocks, there are ways of benefiting in a sideways market. Oil itself is one of those assets that people use to kind of hedge their portfolio. If you're investing in individual stocks like the S&P 500, all of those indexes, those 11 indexes that are not indexes, but the portions of the S&P 500, they're all in the same basic asset, which is stocks. And when the market is crashing, and that's one of the reasons we're seeing so many stocks get hurt now, is that the correlation becomes very high. It's a similar asset, and all those assets kind of get bunched together and kind of sucked down a drain, good companies with the bad companies. Well, there are ways of hedging those portfolios with assets that are not part of that market. Oil can be traded in the futures market. Silver, gold, lean hogs, as you mentioned before, commodities. The commodities are one of those assets that a lot of the big players utilize in high inflation markets and markets where we're really concerned about a move in a different direction. Oil actually, let me step back a second. Gold and silver used to be kind of the go-to hedges. Oil now really has done a much better job of providing a hedge. If you look at last year, gold and silver did not do very well.
No, it's really been flat, actually, for a couple of years now.
Yeah, and when you look at what's been happening with inflation now is, pounding on the 7% door, but oil and silver have been going down. They have not been providing the hedge that people used to rely on them for. But oil is maybe kind of moved into that position of being a better hedge. That's one way of protecting your portfolio. But there are other ways. There's basically the same thing as having an insurance policy on a portfolio. Mm-hmm. That portfolio or that insurance policy goes up if your portfolio starts to get hit. You don't have to sell anything you own. Maybe you have a bunch of stocks you have emotional attachment to or for some reason don't want to sell. You can hold on to those, but you can still protect your overall portfolio by using that basic insurance policy that we talk about in these classes.
Yeah, and when Al's talking about hedging your portfolio, basically he's talking about, in a nutshell, it's offsetting any losses that you're having with markets that are going up. So there's inverse correlations with these markets. When the market's going down, some futures contracts are going up.
Sure.
So that's a way to offset any losses, and that's really to protect what your those gains are. And it's just understanding what those strategies are. And you talk about that in these investing classes, different ways to protect your portfolios from a down market, but also still participating even if it goes down, up, or even sideways, as he was talking about. There's markets, especially like with he mentioned silver, pretty much sideways the past couple of years. So opportunities with options, the market called options. In these investing classes, when you're talking about that stuff, it's a real eye opener because most people have never heard about this stuff. Maybe heard about what it is, but not really knowing the concept. So if you want to learn more about those strategies for all market conditions, especially in your portfolios, come to one of these investing classes that Al teaches. They're right here in Bloomington. They're free. They're about 2 hours. Call 952-814-4410 or just text the word INVEST to the number 484848. for 2 tickets plus the the financial quick start kit, which includes those free stock picks as well. So you mentioned something that I really want to elaborate a little bit more on is, let's just say an investor, I'm looking at SLV here, but let's just say just a stock in general. You mentioned some people don't want to sell what they have. So say someone has a stock, who knows, they may have an emotional attachment to. They don't want to get rid of it because they have a longer term perspective on where it could go at one point for whatever reason. Okay. What do you mean by that? If someone has a stock, is there a strategy that maybe has a potential to generate income without getting rid of that stock?
Mm-hmm. Yeah, and that's managing your portfolio. It's utilizing what you have and increasing the benefit to you with that particular portfolio. If you're holding stock, typically it's an option strategy that can be used to bring in additional cash. If you have, and this just happened a couple of weeks ago, one of the people that came into the class worked for Medtronic, and most of their retirement money was in Medtronic stock. Now, Medtronic's taken a bit of a hit here recently, too. Great company. I think we talked about it a week or so ago.
I think 2 weeks ago we did.
Yeah, but here there is a strategy you can use where you can still participate in the upside movement of that stock, but be protected if it goes against you.
Yep.
Back when I was working as a broker, I had a client that came in with $22 million worth of stock that he got. He had been he'd been an angel investor in a company that was bought by a much greater company. He didn't want to sell it. He didn't want to get out of it because he was so sure it would go up in value. So we did this strategy where he could still participate if it went up, but he was protected if it went down. It did go down, as a matter of fact, by about 2/3 of what its value was, but he was protected because of that strategy.
Yep.
So you don't have to sell something if you don't want to.
Might that be called a covered call?
No, it's actually a little more sophisticated than a covered call.
So that's one strategy. What is that one called?
It's called a collar.
Okay.
So you're protected. You can participate still in the upward movement, but you're protected if it happens to go in the opposite direction.
Correct.
So for anybody who has a large holding in a particular stock or a few stocks, that's something that you might want to consider.
Yep. I mean, those are strategies that I think most people don't know that they're able to have, to do that in an account because you're told to just buy a stock or an exchange traded fund and just let it sit. Well, how about learning the strategies that if you do like a stock, maybe you want to get into a stock, but one that has the opportunity to generate income off of. It's all about having those strategies in your tool belt. So that way that, you could potentially even lower your average stock price with some different some different techniques with the options market. But these are just a few things that we cover in these investing classes. Up markets, down markets, strategies for sideways markets, strategies to collect cash as you hold a stock. I mean, Al's talking about some different option strategies. The strategies are simple, okay? You just have to learn how to do them because it's a skill that you build. And we talk about how that's done in these investing classes. So one last set of tickets for an investing class right here in Bloomington. They're 2 hours, and you're going to receive some stock picks when you get registered. Call 952-814-4410. That's 952-814-4410. Al, we always have some great topics, some great tips. What is today's OTA tip of the week?
Well, you know what, Josh, right now we have a market that's just handing us tremendous opportunities on a regular basis. But just as in the past, when we've had market conditions similar to this, we're going to have people coming into these classes saying, gosh, I wish I had done something different when I had the chance. But remember, the more you dwell on what you should have done or could have done differently, the more you miss out on what you can do now. Mark Twain said this, the secret of getting ahead is getting started. There may never be a better chance for you, a better time to get started than now.
You're exactly right. It's all about moving forward, continuing your direction that you want to go. Do that in the financial markets. Learn the skills to build wealth. Learn the skills and techniques and strategies for income potential. 952-814-4410 for 2 tickets for the investing class right here in Bloomington. As always, same time, same place next week. Until then, retire young, my friends.